Afternoon team, RTech here. Just want to run you through a quick video, a quick VPA analysis video. You're probably going to have to excuse me, I am not very good at these things. However, I'm willing to give it a go and try and share just a little bit of education on how I like to trade SPY SPX intraday. So we're going to start off with hourly time frame, and we're going to be looking at the example from Thursday the 31st of July. It's a really good example in my opinion, so we're going to use that, and we're just going to quickly sort of run through a couple of little bits here. So first of all, starting on the hourly time frame, we're going to mark off just some basic support resistance levels, levels that we think will be important as the session goes on. So what we're looking at here, we're looking at all-time highs, and we're going to mark those off. Remember, with these you can also click on and you can add some text here, so if you want to remember what they are through the day, you can add a little text on there. We're just going to mark off a couple more of these levels here. Again, ones that have been sort of support, and then resistance at the end of the day yesterday. This one here, and also I quite like this one in here. So let's try and get this kind of straight. I'm like bears right now. So there we go. We have our sort of basic support resistance levels punched in there. So I like to view market open on the 5 minute. Again, a lot can happen at open. You get a lot of volume. So I like to watch it on the 5 minute time frame and just see how things start to develop. So before we start, we're going to turn on extended trading hours, and we're going to jump in and put on just a basic pre-market high and low level, and just a basic 921 cross also. So as you can see, price has gapped up dramatically from close the day before, 634 to 641. Absolutely ridiculous move overnight and in the morning. So chances are, with a gap up this size, we're going to be looking to be coming back and testing some levels at least through the day. Chances are you're not going to get a sort of 6 point gap up and then keep gapping. The market is going to want to come back and at least test some levels. So let's see where we are. Let's get to the end of pre-market. Right, so here we go. Market has now opened, gapped up hugely, but now we've came back. Market has opened, it's been selling off sort of since the pop in pre-market, selling off. Sell off kind of continued, got a little bit faster as market open approached, and as we can see, that has continued as the market has opened. Again, unless I'm trading orb, I'll trade the 15 minute orb on the 2 minute time frame, but that's a different video. So I just want to use this one for an example of VPA and what I like to look for. So again, I'll be looking at this on the 5 minute chart, just seeing how the day's opening. So as you can see, came down, gonna try to hammer off all-time highs here, sold down through it, come down to our next level, caught a little bit of support here, pushed back up to pre-market lows. However, again, volume, candlestick analysis, not entirely sure this is a truthful move yet, so we would still be watching to see how the day develops. Again, I like to use multiple time frames through the day. Use it hourly, 15, 5, 2, and the 1. I like to see how things are shaping up across different time frames, and of course the volume profile changes throughout different time frames also. So again, if we're looking at this here, just as we're watching, what are we getting from here? So ignore this last one, it popped in here. As you can see, came in, just drove the market up to pre-market lows. However, we have rejected pre-market lows multiple times here. So remember, these are 5-minute candles, so 5, 10, 15, 20, 25, 30, 35 minutes we have attempted to break our way through pre-market lows. We have not managed to get through that level, rejecting the 5-minute extended hours 21. So at this moment in time, it's telling me that we are not going to get above this level for now. Chances are we are going to want to come back down and find some liquidity elsewhere further down the range. Again, volume is nothing stand-outish so far. However, your price action is telling you that we're struggling to get above pre-market lows. So you've got to be thinking that, okay, let's come test these levels, see if there's some bulls willing to step in and drive us higher. If not, let the action unfold and see where we go from there. So this next candle is one I like. This is the exact type of candle that I would be looking for. And as you can see, the sort of previous candle here came down, hammered this level, bought back up, but this candle here came up, tested the 9 EMA, and bears have now driven this candle down. And what do you notice with the volume profile? Bears stepping in. So came up, tested, forced this down. Bears looking to step in here. I quite like this. It's a little rollover H looking pattern. Again, we're still early in the day. We don't really have too much of a defined market structure set up. However, with this volume, this look at this candle, with this preceding price action, I would be looking at a short position here. So let's jump in here and look for a short position, possibly wait until the next candle plays out to see where we are going. Right, okay, we've just got a sort of doji candle here, a little bit of a volume anomaly here. However, this candle, this volume, I like this, so I would be looking at entering a short position here. I like to target a 2-to-1 risk reward ratio, and I also like to set my stops above like a hammer candle or a Marbozu candle. I like to set my stops above or below these types of candles. So we're going to set our stops just above these wicks where we have rejected multiple times already in the day, and then we're going to open up and look for a 2-to-1 risk reward ratio. Now be aware that the predominant trend has been up before this. However, market is running a little bit hot. It's gapped up huge amounts. So again, this would, I don't like counter trend trading per se, but as we can see already, it looks like bears are looking to drive the market down in search for liquidity further down the range. So let's open this up. As I said, this is rejecting the 5-minute 9. This looks good, volume coming in. Let's just play the tape on a little bit, and what can you see? So bear stepped in here, bit of a volume anomaly, again another volume anomaly here, but then you can see prices just beginning to waterfall down out of here. We are now down through this level here. Our next important level that we've got marked off is until down at 634.33 there. So the trade is moving well with us right now. As this move is happening, especially these waterfall type candles, the market's moving fast, and the IV is spiking on your contracts. Chances are VIX is popping with this move flushing down, so your IV is increasing on this move. These contracts are now paying very handsomely from sort of 638.50, 636.50. That is a $2 move in the space of sort of 20 minutes. Your contracts are, chances are, depends what strike and DTE you go for. If you're playing 0 DTEs with maybe 2 strikes out the money, these are probably running well over 100% right now. So you'll be trimming out well into this, because as you can see on this candle here, we've got volume starting to come back in again on a smaller spread than this candle. So you've got to be aware, you've got to be looking at this as it's going on. Chances are that there are some bulls starting to step in a little bit here and avoid this water falling over. So let's roll on a little bit, and we've got a couple of different strange things going on here. So as you can see, volume anomaly here, you would be thinking that bulls are looking to step in, and again we've got a tweezer bottom set up here with some nice volume also, so you'd be thinking that bulls are going to want to step in. And the first level personally I would be looking at, if they were to reverse this, is this level here, to see if we can turn this support into resistance. However, this candle, very strange, same spread candle as these two, but on significantly less volume. So, and this is why we use multiple time frames. So if we jump over to the 2-minute chart, you can see, as you're watching, I'll be flicking between 2 and 5 here. As you can see, we're just consistently rejecting this 2-minute 9 EMA. We broke down hard here and here, so we got a little bit detached from it. So all the market's doing here is trying to float us back into this EMA, and you just watch this EMA as we've been riding it down nicely. You can see, yep, market stepped in, and as we flagged out into the 9, what have you got? 0 volume. So that's showing you that bulls don't have an interest here in trying to drive us back up above these EMAs and retest this level here. This is just a sort of flag out into here. No bulls stepping in. Bears, well, I don't know where they've been lately. Still low volume, stepping back in here, and they have now flushed us down through our flat out take profit. You're completely out of the market here. You have got a fantastic move from here down to here, a $3 move. Your day is made, depending on how you played it. Your week is almost made pretty much, and then you're kind of out. But as you can see, when we come down here, good spread. Sort of my Bozu candle here, there is a little bit of a wick, but then your next candle, inverted hammer on equal volume, so it shows that again the market may want to look for a reversal here. But let's get back up into the 5-minute, and as you can see, completely different candle, good volume, Marbozu candle. So let's roll the tape on a little bit more. And as I said, when we were over in the 2 minute here, you can see this little inverted hammer here. That is a nice candle and a sign that the market at the bottom of a downtrend can be ready to reverse. At the top of an uptrend, it is a completely different looking candle here. Okay, so this is like a reversal candle. It just shows you that the market's trying to force this back down. Excuse me, I am watching the football or the soccer at the same time here, so it keeps grabbing my my attention. Apologies. This is bear forcing this down. Looks like it wants to roll over. But if you get an inverted hammer at the bottom of a downtrend, it can indicate that we are looking at a potential reversal. And what have you got? You've got your inverted hammer, and then you come down here, look at the volume on this, and look at the candle spread. Yeah, you can be certain that buyers are stepping in here. Another inverted hammer, and away we go. So let's get back to the 5 minute, because that's predominantly what we're looking at as of today. And let's roll on a little bit. So I want to now bring your attention to this. So let me clear this off the screen quickly. So as you can see, we had a little indication on the 2 minute that a reversal may be coming, and sure enough, we have caught that reversal. Big, again, another sort of Marbozu candle. I'll look at the top, but as good as the market is continuing to come up. However, what do you see with the volume profile? The volume profile here is showing that this is, in my opinion, a fugazi. As Anna would say, beware a rising market on lowering volume. And sure enough, with these candle spreads and this shrinking volume, personally, I'm thinking this is a load of nonsense. I believe I did actually trade this move, so we'll just roll it on here in a minute. But what I also want to point out right now is that we have now got a defined high and a low for the day. Let's stick a fib on there, and we've got our high and our low. So at this point I am looking for confluence. I have previously noted that SPY loves to retrace that golden pocket. It just gets attracted there. I mean, that's the I played puts on Friday, again from a very similar setup to this, with a high, a low. We flagged into the golden pocket, and I had 30% for my day return on those. So back to here, what we're looking for is we've got this support resistance line here, which is kind of in between the 0.5 and the golden pocket. But with the golden pocket, we have also got the lower end of this range here. So even without looking at a fib, you could mark off the bottom end of this range, because price will often come up, test the end of a range before picking a direction either way. Anyway, we're getting a little bit detached from what we're looking for. Let's roll on, and as you can see, I'm just going to roll on a couple more. What have we done? We have rolled up into here. Beware a rising market on lowering volume like we have here, and also beware of rising volume and shrinking candle spreads. So all we're doing here is pretty much what you would class as a dead cat bounce. You're just coming up, floating up, volume starting to come in, candle spreads are shrinking, This move to me is just complete and utter nonsense. I think I actually pointed this out on the day. And now we're up into the golden pocket. We've got a doji candle here, sort of spinning top, and volume is really starting to pop back in. We're also retesting the lower end of this range here. So this is my bread and butter, my friends. This is exactly what I look for. Excuse me. So let's enter a short position, which I would be doing. This is the exact type of setup I love. I will be looking again, so I put my stops over this support resistance, but again this could be quite fluid, again dependent on price action. I would probably let it drift up to somewhere the 786, watch its reaction to this initial sort of sell-off candle here, but for today's show purposes, again we're just going to set a 2-to-1 risk reward ratio, close enough. And let's roll on and see what the market does from here. Again, a couple of bits of volume coming in here as bulls are trying to hold it, or algos are trying to hold it above these EMAs. However, the market's just having none of it, and it just looks like it wants to roll over, which it is. Volume starting to come back in again on this candle, and as you will see as we go, this candle here again came up, tested EMAs, having absolutely none of it. Bears have driven this back down again and again, and we're simply just waterfalling over. Again, here your 2-to-1 risk reward ratio, yes, it's quite a small range. However, here you would have the majority of your position out here, and if you were to leave a couple of runners, leave some runners, you'd be catching this move. Again, IV is spiking, volume is coming in to support this move down. If you're holding on to your runners there, well done. And again, if you look at just the setup we have for today, all we have done is come around, and what we're doing, we're just making an H pattern. So you would be looking at here, and then your next support resistance level here. So from here you would be looking at, again, Mr. Fibonacci, got a trend based fib extension from your high of the day to the low and back to this high. And what are you looking for? Again, you're looking for confluence. So your golden pocket is the lower end of this range, and then your 786 is just above this support resistance level here. So let's roll on a little bit more, and bang. So we've came down, flushed straight through the golden pocket, but we've hammered off of 786 and this support resistance level here. Good volume coming in. Look at the lower wick here and here, so it shows you that bulls are stepping in to defend this level. However, you have got your H pattern, you have got a defined trend for the day. The defined trend is obviously down, but again, you have now got two beautiful trades. If you're still in the market at this point, you need your head examined. You should be hitting the gym or reading a book or watching some videos or gaining more education, anything that you can do. You don't have to sit in the market and stare at charts the whole day, especially if you've had a nice, if you've had a beautiful return on any of these two trades that we have already pointed out. Now, if you're a bull and you're looking for potential reversal here, again, flicking down the time frames, you can see that we've came down, volume really starting to come in this batch down here, and yet when you hammer this level here, this candle looks like a great point for a little reversal, whether it's just again a dead cat bounce. If you take your fib from there to there, now your 618 is up here, your 0.5 here, however we've got the lower end of our range here. This is the first place, always look left. So this is the first place you should be looking, and that sort of 382 fib would be your first point to be watching. So yeah, this looks reversal in nature, however you have got a defined downtrend for the day. So let's roll on a little bit on the 2 minute and see where we go from here. As you can see, volume still coming in at the bottom, however has really started to flake out as we just come up to the 2 minute 9 EMA, and the lower end of this range here, you can see volume has dropped off drastically. So this support resistance level here, chances are that there are still buyers lying in here with sort of unfilled orders. It's also a place where obviously other traders are sitting looking at the chart going, yep, I like that level, I like the volume, I'm going to step in here and I'm going to take a long. However, as you can see, all we did was flag up to the 2 minute EMAs, you jump up into the 5, and then that's an even better example where you can see just the lower end of this range, we just came down, hammered that, flagged out. Again here, no volume, so stepped in here, but they have no interest in trying to push the market higher when we came up to the lower end of this range. All we've done is flag out into the 5 minute 9, volume coming back in again, and we have now flushed this level also. So if you try to chase this and caught this with a 2-to-1 risk reward ratio, you can forget about it, you've been stopped out probably already. So again, shows you the pitfalls of counter trend trading sometimes. Let's roll this on a little bit here, and as you can see, the trend just continues on. Inverted hammer here on good volume, so this shows that a potential reversal is coming. Doesn't have to, but it shows you that there's possibly a reversal coming. A little bit more volume here, and if you compare this spread in volume to this spread in volume, it's starting to look anomalous. Again, another inverted hammer here, followed by this hell of a candle in here that looks definitely like buyers are stepping in. Jump into the 2 minute, and you've got dragonfly hammer candle. The 5 minutes are dragonfly, yeah, but the 2 minute, yeah, sort of hammer dragonfly, big volume, some nice volume following in here. Again on the 2 minute you can see inverted hammer, so signs of a potential reversal. Again, we're down at this support resistance level also. The market has flushed a good amount today as it is, so don't be surprised by bulls stepping in at some point. I mean, we went from 640 to 630, 631, so we're down $9 on the day. So do not be surprised by bulls stepping in at a key level at this point in the day, considering how bullish the market has been overall. We will roll this on a little bit more, and as you can see, the market has got a little bounce going on here. However, if we just take this and mark the lower end of this range here, there's also an imbalance here. You know, like as I'm watching this, I can see this imbalance already. Well, I don't really need to mark them off. Like, I'll mark them off when I'm sharing a chart so you guys can see them, but chances are, like, I'm seeing this, like, it's just part of my process. There are various indicators that will point out fair value gaps. They are a great place to target. Also, but again, that's another video. Coaches got videos on fair value gaps and trading them, so I would check that out. But from here, from our volume price analysis, again, got this this dragonfly here, but then as we go on, what do you see? We see volume starting to flush out and candle spreads start to shrink as we approach this 5-minute 21 and the lower end of this range here. Let's roll on and see what we do into, right, so what I will mention here also is that we are into the last hour of the day. I do not trade the last hour of the day. A lot of nonsense tends to happen. Big volume starts coming in, you start to get fake outs, moves. It's something I'm not interested in. You tend to get a lot of noise. I prefer, like I said, to trade sort of intraday. This last hour is not really of any importance to me at all. However, if we continue to look at this, all we did was we came over, hammered out here. All we've done is come up, and again, this is what we've seen today already, as we've just seen a bounce, a roll over into some EMAs and key fibs, and then we've just rolled over. And again here, volume drying out, and as you can see, as candle spreads are shrinking, as we're approaching the lower end of this range here, volume starts to come in, bears stepping back on the gas, rolling over this EMA and pushing the market back down again. So we will roll it on, and again, you could have quite easily taken, I mean, this is a bit of a sketchy fib here, yeah, but again, if you took it for this little pop here, down to the low of the day there, and look for your confluence, what did you have? You had the lower end of this range and did 786. Excuse me, I'm using my laptop, so it's a little bit clunky. This end of day volume is really annoying. So as you can see, EMAs, lower end of range, 786 fib, volume drying out, volume then starting to come back in as candle spreads are shrinking, and all we're doing is rolling over EMAs down and into low of the day at the end of the day. So yeah, some great examples of VPA in this specific day. Sorry, I'm just going to clear the end of day volume out of there because it just makes a mess of everything. Really great day. Like I said, I did trade this. Shows multiple trading opportunities. I didn't really highlight this one too much, but again, that would have been a nice little risk reward trade there. If you'd taken this one, again, long position, so you'd maybe taken it here, you'd be looking at your stops below here, and then a 2 to 1. Let's see if we can find a 2 to 1. Yeah, so you could have played that bounce quite nicely, because your 2 to 1 would take you up to this support resistance level here, and stops it just below this high volume sort of hammer here. So again, multiple ways to trade it, multiple ways to play it. Recently, honestly, it's been a bit of a nightmare to trade. It's been purely algo trading, grinding, chopping, just hugging EMAs. It's not, this day stands out as a really fun day to trade. Good price action, good VPA. This is how SPY used to trade, and it's a hell of a lot more fun trading a day like this than it is, say, OPEX Friday. I already knew Friday was going to be pretty awful. It was fully more awful than I thought it was going to be. But days like that, I tend to just stay out of the market. You don't have to trade every day. And if days like these come along, these are the days, these are just absolute milk and honey days. They're beautiful days to trade, multiple opportunities. And like I said, great VPA and great price action. So with that, I'm going to end because I think I've waffled on for more than 30 minutes already. I hope this video made sense. I hope you understood what I was saying and what I was trying to portray. But yeah, if you've got any questions, please reach out and give me a shout and let me know. Other than that, I will be in the chat over the weekend, so we'll see you all in there, and I hope you enjoy the rest of your weekend. Take it easy, team. Bye bye.